Good evening, everyone, and welcome to the Theme Talk session. So, Theme Talk is a new series which we've started, and this is the first webinar under this series. And as the name says, Theme Talk, the idea is to cover and give you an update about our sector and thematic funds. So, we have around 10 11 sector thematic funds, and we will be conducting these sessions every month. So, there'll be around 2 sessions every month, and the idea is to cover all the sector thematic funds over the next 3 4 months. So today the theme is pharma and healthcare theme. So if we look at India's pharma and healthcare theme, it is a very interesting play. It is one of the very few sectors in India that benefits from both domestic spend and export growth. And if you look at India's pharmaceutical sector, within the pharma sector, there are different subsegments. For example, we have the domestic formulation business, which is more like a branded business for pharma companies. Then there are US generic companies where Indian pharma companies account for almost 50% of the global share. Then there is CDMO segment, which is again emerging subsegment with long-term tailwinds. And then there are many companies which are pouring into the biosimilar space as well. Now, when we look at the healthcare services segment, again, within the healthcare services segment, there are different set of opportunities in the form of hospitals, diagnostics, and medical insurance companies, and so on. Now, each of these subsegments go through a different business cycle and therefore offers a different set of opportunities. So today, to discuss all this, we have with us Mr. Nikhil Mathur, who will help us understand the subsegments, what are the growth drivers of these segments, where are we placed in the industry cycle, and how are these segments positioned from a valuation point of view. So just to give you a background about Nikhil has close to 14 years of experience. He joined HDFC AMC in 2021, and prior to joining HDFC AMC, has also worked with Goldman Sachs and Ambit, where he was covering the healthcare sector. He has done his MBA from IMT Ghaziabad, and he has also completed all 3 levels of CFA US. And at HDFC AMC is also the fund manager for HDFC Pharma and Healthcare Fund. So this fund was launched in October 2023. So it's been almost 15 months since he's been managing the fund. So he'll also give us overview about this fund, how the fund is positioned in the current environment. And if you look at the returns of this fund, this is the top performing scheme in the category. So this fund has delivered close to 50% returns over the last 1 year as of 31st December 2024. And compare this returns with the benchmark and category average, which is close to 40%. So this fund has generated an alpha of almost 10% over the last 1 year. So without wasting much time, I will now hand over the call to Nikhil. And participants, if you have any questions about the pharma sector or about the fund, you may type your questions in the Q&A box. Post Nikhil's opening remarks, we will take your questions. Over to you, Nikhil.
Yeah, hi, Ketan. Good evening to everyone. Thank you so much for giving me this opportunity. So I'll just share my screen. So what I'll do is I'll run through a few slides for first 15-20 minutes. And then as Ketan said, I will be more than happy to answer any questions that the participants might be having. So I'll just share my screen. Yeah. Ketan, I think this is visible, right?
Yes, it's visible.
Yeah, sure. Yeah, so let me talk about 3 things in this opening remarks. So first is I will talk about the opportunity set that the Pharma and Healthcare scheme encompasses. Second is I'll talk about 6 or 7 broad trends that are there in the sector. And third is valuations, which I think is very topical in these markets. So I'll touch upon all these 3 aspects, and then we can move on to Q&A. So like Ketan mentioned, Pharma and Healthcare is a fairly broad scheme, and there are different drivers for different subsegments that are present in this particular theme. So there are 3 broad categories in which companies kind of participate in this particular subsector. So one is the domestic spend. So any healthcare spend that we are doing in India, either for domestic pharma consumption or in hospitals or diagnostic services, that is part of the domestic spend. The 3 broad things that we are seeing in the domestic side are that one is there's a penetration uptake happening for quality healthcare. Second is there's an increase in elderly population in the country, but so is life expectancy also going up. So longer the expectancy and more the elderly population, chances of healthcare services seeing further penetration uptake will be high. And there's a disease pattern change happening in the country, not very new. It has been happening for last 1 or 2 decades, but it's gaining more prominence because of the increasing elderly population. On the export side, we still have a large total addressable market, which is denoted as TAM, via the patent expiries that the sector will see in the coming 5-6 years. Many Indian companies have forayed into complex products, which is driving growth. And the CDMO space, it's very topical, and there's a big outsourcing trend happening by global big pharma companies, which is a good opportunity for the Indian companies in the coming decade. And as far as manufacturing leadership is concerned, I think the government's PLI scheme has been a booster shot for the sector. We have a labor cost advantage now, even versus countries like China. And over the last 2 decades, R&D ecosystem has been developed, which can be leveraged going forward to further realizing growth. As far as the listed universe is concerned, it is restricted to these 6 subsegments. Within pharma, we have domestic formulations. We have the exports opportunity. Now, exports can be played via the US generics route, which is where the traditional or the frontline pharma companies are present in, or it can be via the biosimilars route as well. And third is the contract development and manufacturing organization route. This is where we have shown some credibility in the last few years, and in the coming decade, I believe growth will be much high in this particular subsector of all the subsectors. And secondly, we have the healthcare services. Diagnostics is part of this subsegment. You have hospitals, and retail pharmacy as well is emerging as a important investable space in overall healthcare theme. So as far as the broad trends are concerned, I think across these subsegments, the trends are likely to be favorable, both from a medium-term perspective as well as from a longer-term perspective. If I look at the US generic space, in the past few years, the US generic space has gone through a big down cycle. And the reason for this big down cycle has been multifold. One is that in the US, the distribution ecosystem has been very consolidated. The competitive pressures in this market went up post 2015, which is why a big down cycle happened from 2015 to almost till 2022 end. In the last 12-15 months, what we have seen is that the number of drug shortages in the US have shot up. There's a direct correlation between drug shortages and the broader economics of supplying drugs to the US. As the drug supply economics to the US deteriorated in the last 4-5 years, a bit of competitive pressures eased, and which is where we are seeing a slightly better pricing environment than what it used to be. And secondly, in the US, all the filings are done via ANDA submissions. ANDA means a particular drug has been filed and will be launched in the US. So what we have seen there is that the number of ANDA submissions over the past 2-3 years, they have come off, and that has a direct impact on the level of competitive pressures that this space will see in the US. So things are better now in this space than what it used to be. As far as the opportunity set is concerned in the US, in the coming 5 years, almost $32 billion worth of small molecules will go off patent. On the biosimilar side also, Indian companies are trying to make some inroads there. Maybe not in the immediate term, but in beyond 3-4 years, this will emerge as a big growth driver for the space. Here also, we are seeing almost $60 billion of worth products going off patent in the coming 4-5 years. So I think this is quite clear that the TAM is large enough for companies to keep on registering growth. As far as the domestic pharma is concerned, there has been some slowdown in the overall domestic pharma due to competitive pressures from unbranded generics. However, what we are seeing here is that the top 10-15 companies, they are steadily gaining market share. So as far as our investment universe is concerned, it is primarily hinged on the larger companies, how they will perform. And there we are seeing favorable trends that despite slowdown on the volume front in domestic pharma for the entire industry, but the larger companies are gaining market share. A big growth driver that is emerging for the Indian healthcare services is insurance penetration. So what we have seen is that from FY18 onwards till about FY23, the number of lives covered by group and by the private insurers, that has almost doubled. And on the right side, you can see a chart which is suggesting that uh, the household out-of-pocket expenditure on healthcare, that has been declining steadily in the last 20 years or so. And that is primarily because the insurance contribution is kind of going up in the overall pie. So the affordability of healthcare services, despite it being on the expensive side, has improved in the last 15, 20 years. And insurance is the key reason why that has happened. We see that these trends will continue to play out in the coming years. And that's why you will find that many hospitals which have struggled in the past are reporting decent occupancy levels than what they used to in the past. The CDMO side of things that I talked about, it is directly dependent on how the global biotech companies, they get funded. The interest rate environment was not great till about, let's say, a few months back. And what we saw in CY21, CY22, extending into CY23, the biotech funding available for these companies kind of came off very sharply. In CY24, mid of that year, we have seen some green shoots in terms of growth improving. I think this year is still going to be a bit choppy because I'm not sure how the Trump's policies will play out. But if there is a spike in bond yields in the US, we might see some bit of slowdown again in first of this year. But I think this is a trend for Indian companies from a 3 to 5 year perspective. I'm not taking a very short-term call here, let's say next 6 months, 12 months. We have to take a slightly long-term view here over a 3-4 year period. And we find that India is very favorably positioned today to take advantage of the global outsourcing opportunity that is available, a bit like how it happened in the IT services space. A lot of what is happening in India is not necessarily end market growth, but the quality healthcare or the organized players, they are kind of getting market share. Couple of exhibits, if you look at the diagnostics side of things, organized still dominates the landscape at almost 73% of market share. And if you look at the modern retail in pharmacy, it is only 11% versus other countries which are at 35, 40, 65%, China, Europe, and US respectively. So there's still a long way to go. I think formalization is a theme which will benefit the listed organized players that we usually invest in. So just a quick recap of the trends that I've talked about. There's a cyclical upturn in US generics. There's still a large opportunity in the US that will be tapped in the coming 5 years. In domestic pharma, there's some bit of consolidation that is playing out, which is helping the larger companies in gaining market share. Insurance is a big enabler for healthcare services in India. We have seen that the number of lives covered had doubled on the private side from FY18 till FY23. Biotech funding has seen some green shoots, with a caveat though. This year might not be still be a full year of recovery, but if we take an extended time horizon, I think we'll find good investment opportunities in this particular space. And formalization has been is a trend that is playing out, and I think in the coming decade it will continue to play out. Valuations, I think this is really the elephant in the room. Valuations, just to be categorically clear, are on the expensive side. Nifty Pharma is trading at 30 times 1 year forward price earnings ratio. This implies a premium of almost 28% to its 10-year average of 24 times. However, what we are also seeing is that the frontline pharma companies are in an earnings upgrade cycle for reasons that I talked about in the previous slides. So I suspect that while at a broader level, the valuations are on the expensive side, but a pharma and healthcare fund can still find reasonably priced opportunities in the small mid-cap space, because many of these companies are still trading at reasonable valuations versus many of the frontline firm companies would be trading at, which is getting reflected in index valuations. So I'm slightly concerned with the valuations. But if I take a 2 to 3 year kind of horizon, if longer the horizon, obviously things get better. There are good enough reasonable opportunities for a fund manager like me to take advantage of in this particular scheme. And also, pharma and healthcare space has been so vibrant on the primary side there are a number of listings that are happening, and they will continue to happen in this year as well. Some of these companies are leaders in their respective subsegments, or uh, uh, some of these are very high quality franchises. So selectively, we will keep evaluating IPO opportunities that will come through in this calendar year. Last year also we did participate in a fund in certain IPO opportunities. I think that will continue to be something that we look forward to. On the BSE healthcare side, which is the more relevant index for our scheme, things are slightly more expensive than just on pure play pharma side. So a lot of what I was talking about, insurance penetration, formalization in the Indian market, that is leading to better growth for domestic oriented companies like hospitals, domestic pharma, diagnostics. And this is why BSE healthcare, which is also represented by non-pharma companies, has seen even more re-rating than the pharma side. So I think I'll kind of reiterate that pharma and healthcare is a very broad theme for a fund of our size. There are minimum 70, 80 investable ideas that are there in the pharma and healthcare side. And hence, I wouldn't be overly concerned with the premium valuations that the sector is kind of exhibiting at this point in time. Having said that, a quick caveat here. I think over a 12-month horizon, anything can happen. If the market cools off, so can the BSE healthcare or pharma companies also might trend down. So in these markets, a minimum 2 to 3 year horizon has to be taken care of if considering this particular scheme, because we are not fully sure what can happen in the next 12 months given where the markets are today. Fund overview, I think we are reasonably diversified in this fund so as to not lose out on any opportunities of alpha generation, but also there is reasonable exposure to companies which are slightly safer havens in these markets, and these companies are predominantly on the large cap side. So you can see that our market cap composition of the fund is pretty evenly spread. Large caps are at 37% exposure in the fund, mid caps at 27%, and small caps at 34%. Now, I'm sure small and mid caps, the general frothiness, many experts talk about in various forums. I wouldn't fully subscribe to that view on the pharma and healthcare side, because mid and small is a space where we find higher growth opportunities in pharma and healthcare. And some of these opportunities are not overly expensive, they're reasonably priced. And hence, a 27% exposure in mid cap and 34% exposure in small cap, I'm not too worried about, despite what the wider indices in mid cap and small cap will be trading at. Yep. So I think this is about from my end. Ketan, I'm happy to take any questions that someone would be having.
Yeah, sure. Thanks. So thanks, Nikhil, for the presentation. So moving on to the questions. So before we take questions from the participants, let's first talk about the performance of this fund. So as I highlighted earlier as well, that this fund is the top performing scheme in the category. So, and it has delivered almost 50% returns, and it has outperformed the benchmark by almost 10% over the last 1 year. So what has been the driving factor behind this outperformance, or what has been your secret sauce of this?
Yeah, sure. So I see. I mean, I don't really think that I do anything different what anyone would want to do. I mean, the fundamental principle is not overpay and in trying to select stocks. So see, I think the thing here is that as I said in my market cap composition, we have taken reasonable bets on the small and mid cap side. So you'll find that most of the alpha generation has happened from companies which are in this particular scheme of in this particular space, that is small and mid cap. Also, a lot of alpha generation has happened in avoiding certain stocks, especially on the large cap side, where the valuations weren't that reasonable, and the growth outlook for those companies also was slightly choppy in the last 12 months or so. So I think it's pretty simple. The right stock selection in certain in these things has kind of played out well for this particular scheme. Having said that, I think if I talk about the broader themes, when we started off with this particular fund, we found that at that point in time, valuation in, let's say, in the generic space was pretty reasonable. So we went overweight that particular space. But over the last 12 months, we have reduced our exposure to pure play generics companies and raised our exposure to, let's say, the CDMO side, CDMO space, or diagnostics, or select opportunities in small caps where we found reasonable value. So I think portfolio has transitioned a bit from pure generics to slightly more diversified exposure in more structural themes, and I think that is what has led to a reasonable performance over the last 12 months.
Thank you. Now, this sector has run up over the last year or so, and valuations are also now above their long-term averages. So, do you think this is the right time to invest? So, there's a question from Mr. Prakash Tharwani. Can we suggest pharma fund now to invest?
Yeah.
So,
Right.
there would be investors who would have invested during the NFO. Should they continue to remain invested?
Yeah. So I think I'll highlight three things here. One is, yes, the index level valuations have run up. And it would be not right on my part to circumvent this question and say, no, things are fine. Valuations are on the expensive side. But I'll first highlight that the investable universe of this scheme is very large. Like I mentioned, that there are at least 70, 80 companies which are reasonably worth investing in this entire space. Our fund size is around 1,550 odd crore as of December end. It's a decent size to continue to evaluate certain smaller opportunities or smaller companies which will be faster growing and are reasonably priced. And hence, it wouldn't be a challenge for us to be building positions in these sort of companies. So my first point is that it's a large space. Not necessarily index has to drive what we have to buy or sell. We can also deviate from the index quite substantially and generate alpha and returns for the space. The second point is that I think if 1 year back I was recommending lump sum investments as well in this scheme, I think it has to move to a SIP kind of a investment mode in this particular scheme. And that's quite obvious that when valuations are on the higher side, it's difficult to time whether or not we should book profits, move out. I don't think that has worked out for me as a fund manager in the last few years. So I would suggest staying invested and incremental flows in the more SIP mode rather than lump sum mode. And finally, extending the horizon. See, healthcare is a pretty structural trend. If you look at the government data itself, what it is suggesting is that an average Indian household is spending more on healthcare versus what it was the case 10, 12 years back. And because of some obvious reasons of population aging and life expectancy increasing. So given these broader structural trends, one would want to stay invested. And if you have a slightly longer term horizon, I think things will be better in an SIP mode. So it's a broad space. SIP mode is very suitable still. And extending the horizon of having a 3 to 5 years would be ideal if one is considering this fund at this juncture.
Okay, thanks. Now there's a question from Ravi Teja. So how do margins look like? And and one more question from Rohan D'Souza. With earnings and growth slowdown, can you share some data on EPS of pharma companies? So maybe you can give the roundup about the earnings.
Yeah.
The six.
So yeah, sure. I think it's a pretty good question. What has happened in the past 12 months is, or 2 or 3 things have played out. One is that the input prices for base chemicals, raw materials, they have come off sharply in the last 2 years. So I think that has improved the margins for the sector. And there are certain companies which have certain exclusive product because of which the margins have shot even more up than what they would have if that particular opportunity wouldn't have been there. So in certain frontline companies, there is a big risk to earnings later this year. And that's why if something happens wrong on the input cost front, we are not yet worried much because whatever data we are tracking, the input prices are stable. They haven't yet moved up. So I wouldn't be too overly concerned on the input price front. But surely on this big opportunity going off earnings sometime later this year, I would be a bit worried on certain frontline companies where this risk is there. Having said that, also one should note that in non-export oriented markets such as domestic pharma or in domestic hospitals, companies are able to pass on medical inflation. In the domestic pharma side on the pricing front, there's a 4 to 5% price increase that companies are able to take. So because of which I don't think that if anything wrong happens on the input cost front, on the domestic pharma side, there will be a big worry. And also on the hospital side, because of the case mix evolving and occupancy trending up structurally, I wouldn't be too overly concerned for margins on the hospital side as well. So export generic select companies, yes, I would be worried, but not at all on domestic pharma side, not at all on the CDMO side, and not at all on the domestic healthcare services side.
All right. So there's a question from Soumya Gupta. What will be the impact of Biosecure Act on Indian pharma companies? And what could be the potential value India can capture?
I think on multiple forums, when I speak about this topic, I categorically state that it's very difficult to predict how and when this Biosecure Act will go through. So let me just quick recap of what happened. So many Chinese companies were red flagged that tying up with them is not in the best interest of US companies, and hence the US government came up with a bill because of which there should be some problem on the sourcing front. So this bill was introduced, but see, my contention always has been we have to look at the CDMO space irrespective of the Biosecure Act. And why I say so is that if I look at FY12 to FY22, the combined revenue CAGR for Indian companies were almost 15%. So it was quite an indication, clearly an indication that the space is being targeted by Indian companies and it will continue to grow. The good part about this space is that at a reasonable scale, you build confidence in more and more customers and you get more and more orders. So it's a chicken and egg. Higher the base, you are able to demonstrate your capabilities to a wider set of customers, and you start getting even more orders than what you used to get in the past few years. So Biosecure Act, I am not at all factoring in my estimates when I'm looking at the CDMO companies. I have no way to say that it will get passed in with Trump coming in next 6 months, in next 12 months. There may be a case, might not get passed at all. But irrespective of that, I see a clear trend that Indian companies are investing in the CDMO space. Their capabilities on the R&D front, on the scientific personnel is getting recognized globally by global big pharma clients and smaller biotech companies as well. So irrespective of the Biosecure Act, the growth will be in a much higher space over the next 5 years than many other subsegments that are there in the export pharma side.
So there's a question from Mr. Siva Nagendra. So what Trump policies can impact Indian pharma sector and its valuation? So there's a narrative that Trump may impose tariffs on India, China. So how do you see this?
My simple point here is that Trump's policies on the generic pharma side, they can't be very adversely negative. And the reason I say so is we are still in a situation where the drug shortages in the US are on the higher side. They are not at all at all-time lows. They are still on the higher side. So if any policies which affect or which can induce inflationary effect on the generic pharma side, I would be very surprised if any policy kind of plays out in that fashion. Because if I look at the margin profile or the return capital profile of US exposed companies or US pharma, they have improved in the last 2-3 years, but they are still nowhere close to a situation where they can be called rosy enough. So if that again becomes problematic, let's say if certain duties are imposed on Indian pharma and the margins compress for the Indian pharma companies and the ROCEs compress, I think we again go back to a situation which happened 12-15 months back, that drug shortages shot up in the US and things went awry in terms of pricing and supplies. So at least on the generic pharma side, I am not too concerned that any particular policy will be too dramatic or too adversely negative. I wouldn't take a call whether any policy can be positive, because it doesn't seem that any comments made by him today have been seemingly being positive for emerging market economies. Secondly, on the CDMO side, I think there again, if certain duties are imposed, that actually might benefit Indian companies, because China is a big player on the CDMO side. I don't think it will be very selective that his policies will only impact Indian companies and not the Chinese companies. The Chinese and Korean companies dominate the global CDMO landscape, and if certain duties are imposed, uh, they might actually improve the competitiveness of the Indian companies. So no policy today, from his comments that he has made till now, I think can be overly negative for Indian pharma.
Right. So now, if you look at the pharma sector, it's a very highly regulated sector. So there are domestic regulations like price control, then the global regulations here like US FDA. So how do you see the impact of these two on the sector? Or
Yeah.
are there any headwinds for the long-term structural growth story or any risk in the short-term medium term?
Yeah.
The questions from
Yeah.
participants.
So I think there are two parts of this question. One is on the domestic side and one is on the export side. Let me take for the export side. US FDA, I think, is something that we don't get too overly worried about, and there are a couple of reasons for that. So one is that the Indian companies in the last 10, 12 years, they have improved their overall compliance compliance framework. So historically, what used to happen is, so I think the source of this question can be that almost every second, third day, we keep hearing about a US FDA inspection happening, so and so company getting red flag, the stock is down 10, 15%. I think that will happen just because India has such a high market share in the US, which is almost around 50%. The number of inspections that happen in India will be much higher than what they happen globally. We have the largest number of US FDA approved facilities outside of US. So that tells you the level of compliance and competence that India has built from the US FDA standpoint. That's one. The second part is that today companies are much more diversified than what they were 6, 7 years back. The share of sales from India and certain ROW markets has increased in the mix. Even in the US, the businesses are much larger than what they were 4, 5 years back. You have more complex products in the pipeline. You have multiple plants from which certain products are filed. So the overall sensitivity to US FDA adverse news flows or actions has gone down, at least for the larger companies. This is not true for the smaller companies, but definitely for the larger companies, this has improved. So in summary, on the US FDA side, we don't usually get overly worried when US FDA visits a particular company. In fact, many of our investments have been made in the worst of times when US FDA has red flagged a company. We find that the company's value because of that goes below its intrinsic value, and we then go very aggressive on building positions in those companies. So US FDA, yes, this is about the US FDA. On the domestic side, no regulation is anything new. Pricing side has been there for the last 11 years now. Some sort of headwind that is emerging for Indian companies is not from the regulation side. It is largely from growth of unbranded generics in the country. Jan Aushadhi is something which our Prime Minister keeps focusing on. That is eating up into the volumes of overall domestic pharma. But I have showed in one slide that the larger company, which is the more important universe for us to invest, is getting market share. So there are certain fringe players who are losing market share in domestic pharma, but many larger companies are still doing fine as far as domestic pharma is concerned.
Okay. So now government has extended this Ayushman Bharat free medical insurance coverage for, I think, all Indians over 70 years with a 5 lakh rupee limit per family. So how significant is this step for pharma companies?
So there are two angles to this question. One is the practical side and one is the theoretical side. I think, okay, let me take theory first. I think in theory, this is pretty good for penetration of quality healthcare in tier 2, tier 3 markets, simply because if till now a particular patient was not getting treatment, unfortunately, if that particular patient was passing passing away, you have an option to get treated now. And if you get treated, obviously, post-treatment or even pre-treatment as well, you might require diagnostic services. You might be on medications post-treatment. So definitely, this is a factor which will boost the penetration of um, of healthcare services and domestic pharmaceuticals in these tier 2, tier 3, and beyond cities. The practical side of this question is that Ayushman Bharat, how easily implementable is this? We have a shortage of capacities of quality and higher end quaternary tertiary care beds. The government has still not mandated private hospitals to reserve certain number of beds on the from the Ayushman Bharat side. It's still voluntary, as I understand it. So nothing impacts the private health hospital side, but I'm not sure how such a large population will get treated if the government doesn't set up an investment on the hospital side. So yeah, so it sounds good for penetration, but there's a practical challenge in terms of the kind of quality tertiary care beds that are today available in the country that might hamper the effectiveness of this particular scheme.
I think we've answered most of the questions. So before we end the call, would you like to give your closing remarks? Maybe in Hindi, there was a comment if you can speak in Hindi, so you can give your closing remarks in Hindi.
Yes, sure. I'll give a comment on Hindi. So basically, healthcare and pharma scheme में हमने 3 चीजों के बारे में बात की. एक तो है इन्वेस्टेबल यूनिवर्स, वो काफी वाइड है. जो सब सेगमेंट्स हैं, चाहे वो इंडिया में हो चाहे वो ग्लोबल एक्सपोर्ट्स हो, वो आपस में अनरिलेटेड है. सो एक वाइड अपॉर्चुनिटी ऑफ स्टॉक्स है. कम से कम 60-70 स्टॉक्स इन्वेस्टेबल है हमारी स्कीम के लिए. सो आई थिंक इट्स एक बड़ा वाइड यूनिवर्स है. एज ट्रेंड्स को देखें अगर हम, ट्रेंड्स काफ़ी फेवरेबल है. फॉर्मलाइजेशन हो रहा है ऑफ हेल्थ केयर सर्विसेज. क्वालिटी हेल्थ केयर इज गेनिंग मार्केट शेयर. फिर इंश्योरेंस पेनिट्रेशन कंट्री में इंक्रीज हो रहा है, और ग्लोबली ऑल्सो आउटसोर्सिंग बढ़ रहा है, और एक बड़ा अपॉर्चुनिटी है ऑफ ड्रग्स जो ऑफ पेटेंट जा रहा है, जो एड्रेसेबल अपॉर्चुनिटी होगी फॉर इंडियन कंपनीज. और तीसरा वैल्यूएशंस पे, वैल्यूएशंस एक्सपेंसिव है सेक्टर की, इसमें कोई डाउट नहीं है. तो मेरा रिकमेंडेशन ये है कि एसआईपी रूट में इन्वेस्ट करें. मिनिमम 2 से 3 साल का होराइजन रखें. एंड ये एक स्ट्रक्चरल थीम है अगले 10 साल का. तो बिकॉज वैल्यूएशन ज़्यादा है, मैं इतना ओवरली कंसर्न नहीं रहूँगा, क्योंकि एक छोटा फंड जैसे हमारा है 1600 करोड़ का, वो रीजनेबल बेट्स ले सकता है इन नॉन फ्रंटलाइन कंपनीज जो कि बेटर ग्रोथ और रीजनेबल वैल्यूएशंस पे हैं.
So thanks, Nikhil. Thank you again, everyone, for joining this session.
Thank you so much, Ketan, and everyone for joining this.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.